Is China really getting away from the US dollar? If we look at the following graphs, what we see is that yes, China is certainly increasing massively its purchases of gold, but it's far from having made a significant impact on its total reserves. In this graph, what we can see is that total reserves of gold relative to the global or the total reserves of China is only 4.3%. Well, that is a very significant increase. However, it is more important if we look at it from an absolute perspective. Let's look at the next graph. If we look at the next graph, what we can see, courtesy of Bloomberg, is that China has more than doubled its gold reserves in the last few years. And this is important. Why? Because it's very clear that China sees that its US dollar reserves can be a burden if the Federal Reserve starts to diminish the purchasing power of the currency and starts to implement easing policies in an inflationary environment. What are the US dollar reserves of China? Treasury bonds. And if those treasury bonds continue to decline in price, that is a negative. Therefore, it's logical that China tries to diversify out of the US dollar and into gold. But it's far from over. Therefore, don't bet on those purchases stopping anytime soon. Let's go to the next graph, which shows us the development of the Chinese economy according to the estimates of JP Morgan. What we can see in this graph is that JP Morgan assumes that the economy is going to grow at about 4.5% in 2024, which basically means that the economy is going to be one of the few, if not the only economy in history or in recent history that will grow in a very significant bump and slump of the real estate sector. So an important factor to look at is whether it's going to grow above that 4.5% or higher. But let's look at the next graph, and this one shows us the possible scenarios from the policies implemented by the government. According to Bloomberg Economics, the policies implemented by the government in China, which are positive in my view because they're supply-side policies, i.e. improvement of access to credit, not demand-side policies, Keynesian policies that have led China to its current challenges. So what it shows basically is that there can be a significant boost to growth if those policies work. And what this basically shows again is that Keynesianism always fails. So China cannot go back to implementing those same failed policies of government spending, brutal indebtedness, and aggressive Keynesian policies and demand-side policies. Therefore, maybe this time supply-side policies will work, and certainly reducing the exposure to the US dollar is an important factor, considering that in the United States, maintaining the value of treasuries and maintaining the purchasing power of the US dollar is not particularly the policy of the government. Thank you very much. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.